the type of insurance that already exists, and you're not going to read about it, it's called parametric insurance. Anything that's easy to measure. You got the statistics, you have weather measurement devices, you have ground sensors for earthquake. Anything that can be measured is a parameter. When it's triggered, when it's above a certain parameter, you don't have to justify, there's no adjustment process, there's no calculation. We're not going to send inspectors to see how much of the building was destroyed or anything. We don't care. As long as you declare that you actually had any kind of damage, we're going to pay you a fixed amount, right? So you get a fixed payment. If you have $100,000 cash immediately in your bank account within 10 days, you can go out and hire a contractor, sign them up before everybody hires the contractors, and then they'll disappear for 6 months or a year. You'll never be able to get a roof changed after a hurricane if you don't find a contractor quickly and give them a deposit and give them an advance payment. So it's all about, it's a financial instrument. It's a financial solution to the same problem of covering a risk. Rather than I pay you $4,000 and you give me a piece of paper that promises to pay me for the damage on my house. This is saying, I give you a certain amount of money and you're going to give me a certain amount of money automatically once this is certified by NOAA, that the wind blew a certain mile an hour, or the US Geological Survey certifies the earthquake in California, or the crops failed in Iowa because of the excess heat, certified the National Weather Service, whatever it is. That's the way to simplify the coverage of risk in the best way possible. You eliminate the possibility of fraud, you eliminate the inefficiency of the whole system, the arguments over the losses, the inspections, the delays, the paperwork. And why hasn't this caught on? There's no way it's going to be accepted for homeowners insurance in the United States anytime soon, because Fannie Mae, I'm sure you've studied some of that, mortgage-backed securities, finance. They set the rules for what mortgages can be bought and sold in the US. So a lender issues a mortgage. If it doesn't meet the Fannie Mae requirements, they can't sell it to anybody else because Fannie Mae won't buy it. So they require an insurance policy covering every home that has a mortgage. So this is not applicable. They won't go for this. They want full replacement coverage on the property. So that's a big obstacle to any of this happening. Any other questions?
I understand